What's up guys, welcome back to my channel. I am Arab the Plug, and on this channel we'll talk about cryptocurrency trading, forex trading, technical analysis, trading psychology, everything trading, and also how to make money online. And this is another video where I'll be talking about risk to reward ratio in crypto and forex trading. We all know that when you trade the financial market, be it crypto, forex, or even the stocks market, you are exposed to a lot of risk. Same way you have some rewards to make from the market. So that is why you have to understand the ratio of the risk you are taking in the market compared to the reward you are likely going to get. This is one of the topics that a lot of traders ignore, and it affects them because they do not think in the way of risk. They only think that whenever they go into the market to trade, they only have to make money. But you as a trader, the right mindset you should have is that you can make money, and sometimes in the market you lose money. You lose money not because the market is not good, not because the market is not perfect, but because you as a trader, you as a human trading in the market, you are not perfect and you make mistakes. So when you understand the fact that you make mistake in trading and you are not perfect, you know that it is either of two things. It is either you lose or you win. It is either you have a risk taken out or a reward given to you. So it's either the market takes from you or gives to you. So what you just have to know is that you have to make sure that you get enough money from the market, much more than what the market takes from you. And that is what risk to reward concept or ratio is going to teach you. So the risk to reward ratio marks the perspective reward of a trader. The perspective reward a trader can earn for every dollar they risk on a trade. So which means that for every amount of money you risk in a trade, there should be an amount of money you should get back from the market. So many traders use risk to reward to compare the expected returns they are going to get for their trade in comparison to the money or the amount of money they are risking or they might lose in the market. So you have to understand that the term risk in the markets, when you talk about risk to reward, is about the amount you want to lose, not just the fact that the market is risky and you could lose money. We are talking about how much you are willing to lose as a trader to make something. And we are talking of reward as how much you are going to make if eventually in that trade you do not lose. So consider this example. If you are a trader and you have a risk to reward ratio of 1:7, if you are going into a trade, for example, you are trading BTC USDT, or you are trading GBP USD as a forex trader, or you are trading a commodity like gold, or you are trading crude oil. If you are trading any of this, or you are trading S&P 500, any of these things you are trading, if you have a risk to reward of 1:7, that means you are risking one thing to get 7 reward. And that one thing you are risking is your stop loss, is the amount you are willing to lose, is the amount you are willing to give out to the market if the market takes you out. And the 7 at the other end is the reward you are going to get, which means for every $1 you are risking, you are getting $7 in return. If your risk to reward is 1:3, it means for every $1 you are risking, you are getting a reward of 3. And this comes in when you are analyzing the market. So now, when you are analyzing the forex market or the crypto market or whatever market you trade, you have to be able to measure your risk to reward whenever you are analyzing on your charting platform by understanding how many pips is your stop loss and how many pips is your take profit. And me as a trader, I feel it is reasonable enough to be risking one thing to get 2 things. I don't take a trade with risk to reward of 1:1 because I feel it's not reasonable to risk $50 to make $50. But I feel it's reasonable to risk $50 to make $100, which is 1:2 risk to reward, or $150, which is 1:3, or $200, which is 1:4, or even more. So that is what risk to reward teaches you in the forex market or whatever financial market you trade. So the risk to reward ratio is used by traders to manage their capital and the risk of loss. So by using risk to reward ratio, you understand that you are already sacrificing a certain amount of money for the market. And you know, when you are trying to give your money away, you make sure that the money you are giving away will not affect the rest of the money you have. And that is why you have to think as a trader in the perspective of risk to reward. But if, for example, you have a $1,000 account and on a trade you are making $500, can you give $500 out of $1,000 that you have as your life saving? Does it make sense? No. So the same way it does not make sense for you in a trade to risk $500 on a trade in a $1,000 account. So risk to reward is going to guide you on how to manage your risk in trade, how to only invest or trade with what you can afford to lose, what you can let go, and also how to look at a bigger reward, how to get a bigger reward with just a small risk. So that is what risk to reward is going to teach you. So you have to understand, anytime you trade, make sure you define your risk and you define your reward. So once you define your risk, if the market does not take you out and the market starts going in your favor, you understand that you are going to get a reward. And be patient enough to get your reward. Be patient enough to get your reward. And once you get your reward, don't be greedy that, okay, this trade has given me 1:4. I think it should be up to 1:7. Let me just leave it. In most cases, you get bonds and you get stopped out of the market. So understand your risk to reward, stick to it, and also make sure you always use it, or you also think in perspective of risking something to get something from the market. If you want to learn more on risk to reward, how to trade the market, how to do technical analysis, there is a crypto course, or there is a technical analysis course that it costs just $100, and it's a package course that you can take, whether you want to trade crypto, you want to trade Forex, or you want to take stocks. You can find a link in the description below to get the course right now. See you in the next video.